Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and today I want to start by saying it could never happen here, right? It could never happen here. Well, coming soon, America's own social credit system. You better start accepting this if you're in the camp of people that think it could never happen here. It can happen here, and it will happen here. So do what you can to exit the system, do what you can to protect yourself, your wealth, and your family, of course. But at least we're a little way, at least I hope we're a little way off where China isn't now. They are airdropping. I'm laughing. It's not funny. It's not funny. I just don't know how else to react to this. They are airdropping armed robot dogs in China. So I have no words. Just look at this. This big drone flies in and deploys a robot dog. And for some reason, certain humans think it's okay and acceptable to strap and mount automatic machine guns to this robot dog. I'm laughing. It's not funny. This is absolutely real, as you could see. Is this what's going to be patrolling the streets and making sure we all stay on permanent house arrest? I don't know, but yeah. Also, more reset stuff. You can see here, your DNA will be your data. This is from HSBC. Okay, kind of a chilling advert. So if you are a long-term bull on Ethereum, if you are a supporter of Ethereum, then I hope you realize that this is what you support. And I know what you're thinking, some of you. Camel, what are you talking about? What does this have to do with Ethereum? Well, I'm going to show you really quickly. This is consensus. How do decentralized digital identities work on Ethereum? Okay, and I know what you might be thinking. Yeah, well, that doesn't have anything to do with HSBC, Camel. Actually, yes, it does, because HSBC, third point, participate in a 200 million consensus funding. Okay, consensus, of course, being the people that are talking about the digital IDs on Ethereum. And you can see here that MetaMask surpasses 21 million MAUs as consensus raises money. And amongst these people, amongst these companies, these entities that they were raising money from were, of course, Coinbase Ventures and HSBC, as you can see right here. So if you're a long-term Ethereum, I hope you realize what you're getting into. I hope you realize what you're supporting. And if you don't know, and all of this is new to you, if all of this is kind of surprising, if you don't know about consensus, then go and check out consensus. Joseph Lubin owns consensus. He is a majority stakeholder. He is one of the handful of small entities, 3, 4, 5 entities that control and dominate this chain, can fork the chain at will, can make updates to the protocol, can inflate the Ethereum tokens. He is also one of the people that consents to your transactions. And of course, they will be rolling out these digital IDs and CBDCs on the public Ethereum ledger before too much longer. So I used to be a long-term believer in Ethereum. I used to be a long-term holder in Ethereum. But unfortunately, my stance has had to change and be updated in accordance with the sort of monstrosities and evil that is occurring on this chain. So if you didn't know, now you know. Let's keep going. The Bank of England is stepping up the pace of its emergency bond buying program to calm turmoil in the debt markets following the government's mini budget. So I made a video on this yesterday. I've prepared a summary. It looks wordy, but I promise it won't take very long. So if you missed yesterday's video, you can always, of course, go back and watch that. If not, here is a summary for you. The Bank of England is stepping up its 65 billion bailout to calm market turmoil. So this is basically consisted of 3 things as per their document in yesterday's video. 1, they're going to double the amount of purchases of the gilts from 5 billion a day to 10 billion a day. They're going to widen the acceptable collateral, so they can now back these worthless bonds with worthless index-linked bonds. And they can do so because they can count that as sufficiently diversified. Number 3, they have a new, what they call permanent repo facility every Tuesday and every Thursday in what they call an unlimited quantity. So the pound is likely going to zero. This all, of course, comes because on the 28th of September, pension funds are about to get margin called. What does that mean? Well, pension funds, they hold a lot of these gilts, these bonds, and if you think about a traditional 60-40 model, 60% stocks, 40% bonds, that's a lot of bonds. And they hedge the risk on these bonds using derivatives. So as the bond prices fall, which they were doing, as the yield was rising, the derivatives that they hold to hedge the risk require more collateral. So you have to deposit more funds to keep your positions open, and this is what's known as margin. So if you can't come up with this margin, and you can't deposit more money, the derivatives provider will close out your position, and this is known as getting liquidated or margin called. And this was about to happen to the UK's pension funds. Okay, the UK's pension funds were about to blow up, they're about to get margin called, they're about to get liquidated because they could not afford to pay the margin, the deposit, they could not afford to collateralize the derivatives that they had to hedge the risk on these bonds. Okay, and so the Bank of England had to step in and bail them out and pay their margin. Okay, So they do so, of course, by printing money out of thin air and then using it to buy these bonds or to pay their margin. And the problems with this are, of course, inflation is already high and they continue to print money, making inflation even worse. If you think inflation is out of control now, if you think you're noticing the problems with your bills increasing, the cost of living rising, if you think that's an issue now, you wait till we get 18 months into the future, it's going to be significantly worse. Rates are currently high, and the UK, they can't afford the interest payment on these bonds. They can't afford them already, okay? And when you get into this situation, when a nation can't afford its debt, when a nation can't honour the interest on its bonds, overseas investors lose confidence and the currency falls, okay? So the GBP, the pound, is going to go to zero. One, because inflation's high and they continue to print, and two, because there's no one to buy this junk bonds. There's no one that's got any confidence that we're ever going to be able to pay our debt off, okay? So there's no confidence left in the pound. The pound is going to zero, and it's going there sooner than most realized. And that's myself included. I've known the pound was going to zero for a very long time. That's why I got into Bitcoin. That's why I hold Bitcoin and gold. But even I have to admit, I was not expecting to see this escalate as quickly as it is escalating. I was expecting to see this much later into this decade. But apparently we are going to get there on the early side of this decade. And I would even speculate, and it is of course only speculation at this time, but I have a pretty good track record of calling this sort of thing. I would speculate that we will be at 40 or even 50% inflation 18 to 24 months from today. Analysts at the RBC, the investment bank, questioned whether the bank's latest intervention today was sufficient. Okay, the question is whether these new measures will really change the market function substantially. And of course they will, but only in the very short term, only in the very near term, and then we will continue to see the demise of fiat currencies. We will continue to see them trend to zero as they were designed to do. The bigger picture here is that the functioning of the gilt market is still impaired. This isn't going to change. Ultimately, if we see another jump in volatility, we could see the banks step in again. And of course they will. Translation, QE to infinity, the pound to zero. You better opt out of this system and you better buy Bitcoin and gold to do so. So here is yesterday's video. Go and watch that if you want to see a bit of a deep dive and all of the other things listed here. In the meantime, Bitcoin is undergoing a squeeze. You can see this, the volatility is compressing to highly unusual levels for Bitcoin. Bitcoin is very, very rarely in its life this compressed and lacking volatility to this degree. The last time we saw this was back here before we capitulated down massively. So this is a risk for Bitcoin now. A lot of people think that we're going to get this one last dip. Of course, if you've been watching the channel, you'll know I am not in that camp. I think we're going to bounce out of this cycle low and go upwards from here. But that, of course, is conjecture at this point and it remains to be seen. Bitcoin did, however, just experience a huge difficulty adjustment, the largest in over a year. So this reflects how aggressively new mining rigs have come online and competition is heating up between them. Only the most efficient miners will survive with the Bitcoin price at this level, at this low. Coupled with high energy price and high difficulty conditions, you need to be an efficient miner to survive this. Or, of course, the price needs to go up. I found this and I thought this was very interesting. There's a nice perspective. You can see, according to NYDIG, all of these holdings that it's got here down the left. And Bitcoin is the best performer for Q3 2022. So that's quite nice to see, right? I'm not totally crazy when I say that holding Bitcoin is a good thing. Same, precious metals are the next one down as well. So Bitcoin and gold, and I think this is a trend that we're going to continue to see. I think both of these two assets are going to smoke everything else over this decade. Nice chart here comparing the dollar basket at the bottom to the altcoin market cap. And you can see that every time we get a touch of this upward sloping resistance line for the dollar, we get rejected. And those rejections coincide with a touch of support for the altcoin market cap, which coincide, of course, with upside. So as the dollar gets rejected, the altcoin market gets a bounce. And you can see that as we get these parabolas, we also get the tops and the bear market come in. In today's context, here we are with a touch of the upward sloping resistance line on the dollar and a touch with the upward sloping support line for the altcoin market cap. This would imply potentially that the Dixie is about to roll over, the dollar is about to get rejected, and the altcoin market cap is about to undergo a bull market. Every time stocks went down, the Fed had to cut rates. This time is not different. Fed pivot in November, buckle up. So I have, of course, been calling for a Fed pivot in September or October. So November, it'll be close enough for me. Now in trading, being slightly late and wrong is the exact same thing. So if it happens in November, I will still have to hold my hands up and say I was wrong about the pivot in September or October. But of course, a pivot in November, that would align with the 60-day cycle low for Bitcoin and would result in enormous upside for Bitcoin. So I'll be happy to take the wrong call of the pivot on the chin in exchange for a bounce out of November's cycle low for Bitcoin and an enormous rally to the upside. Scrolling through these comments, you can see a lot of people saying this is outright delusional and it could never happen. So that could, of course, be fuel to upset a lot of people. That remains to be seen at this point. But we are getting close to the end of the month, and we know that there are cycle lows due in the equities, and then shortly after that in early November for Bitcoin and crypto. So I do think that we are going to get some relief, if nothing else. Lynn Alden here pointing out that as the dollar strengthens, many foreign central banks sell treasuries. They use a counter-cyclical currency management strategy. This has to be taken into account when trying to get a handle on forward policy potentials. These foreign sales are often a limiting factor for how tight the Fed can get relative to other central banks. And we are already seeing all of these other central banks pivot, as I've been covering over and over on this channel. We've had the Bank of England, the Bank of Korea, Bank of Japan, we've had Germany, Poland. The Fed and the ECB are surely not too far away from a pivot now. This week there is going to be volatility. We can see by looking at this calendar, we've got PPI and core PPI on Wednesday. Then we've got the G20 meeting and the FOMC minutes all on this Wednesday. The following day on the Thursday, we've got the CPI and core CPI, unemployment claims. So this is going to be massive. Then we've got retail sales and then more FOMC speaking on the Saturday. So there's a lot going on this week. There's going to be volatility. Make sure you are trading safe. Make sure you're using stop losses if you are trading. The Fed is playing with fire. 81% probability of a 75 basis point hike is priced in for now. Okay, so there's going to be a repricing in markets. We're going to see the stock market move around this because either 20% of the market is wrong and we are going to move up 75 basis points, in which case there's likely going to be some downside as this is adjusted for, or this 80% is wrong and the market is going to have to reprice to the upside to balance this. Or of course both of these could be wrong and they could end up hiking way more than 75 basis points, in which case look out below, right? But we'll see how this goes. There's definitely going to be a repricing in here because this is not consensus yet, so it can't all be baked in. We know with our technical awareness, we are expecting a cycle low not until the end of this month, okay? And this could come a little, there's a tolerance of 10% on this, isn't there? So we're not expecting the cycle low to form just yet. Could be some chop in the meantime. That remains to be seen. Still playing patient for here. And of course, the Nasdaq, similar story, but I'm sure a big long is coming out of here in the not too distant future. UKX, patience has been rewarded. Look at this. I wonder if we could buy its support down here. That's something I'm looking at over the coming days. Or alternatively, that scenario where I said we form a little base and then move this trend line across before taking the long. That could, of course, be in play as well. You know the thing I've been saying over and over and over again, Coinbase looking for that cycle low. Same is true of MicroStrategy, Riot, and Marathon. So we'll play this out. We'll wait for this to play out, and then we'll take it from there. Tesla still holding above the lows. I think a little bit more time is likely going to go within a few days of the cycle low being found for the S&P and the Nasdaq. So we'll worry about that when we get towards the end of the month. And the same is true of Apple. I think likely we still chop around here and then go from a breakout. So these are nice trades. This is particularly clean from Apple, so I like the angle of this as well. I think this will be a high probability setup once it emerges. Oil starting to get some level of pullback, but that's understandable. I think we're still going to waddle around here up to the high 90s and 100s, and then I think we can engage in a short on a trend line break. But that trend line, as far as I can tell, is not yet developed. Be interesting to see if we get a touch, if I connect these two lows here. Be interesting to see if this is where we bounce off and then go. So that is oil. Gold still holding a short. This is looking okay for now, isn't it? I'm noticing rejection at resistance, and then of course this critical red horizontal support line that has been legacy support since April of 2020. We're currently daily closed below that and working on another daily close. So I would think that given the cycle count and everything else, that we're likely going to see some further downside from gold. So I will continue to push this trade. I was going to say long and strong, but it's not, is it? It's short and strong, continue to push. Silver right in for that retest. I suspect it's probably going to lose this level based on where gold is at the cycle, but who knows, right? Markets are crazy these days. They don't necessarily have to obey logic at all. Bitcoin still sideways, looking for that 60-day cycle low. How many days are we? If we count today as well, then probably 31 days or less. I could see this coming as early as the 7th of November, but that remains to be seen. We might only be 27 days out. Same is true of Ethereum. I really don't like this coin, as you could probably tell from the start of this video. But if it's going to break out of here, then that's a long, right? Easy money. And XRP still kind of holding this intermediate trend here, so that's okay, but don't want to see it lose this level really. Want to keep trying to push this, and hopefully we can get out of here pretty quick. And dollar, look at this breakdown, retest. Is it going to resume downwards? We'll see. I think we've had our first warning sign, but to be honest, I wouldn't be surprised to see further strength from this. All depends on the Fed and CPI this week, of course, so eyes on that. And the chart of truth, look at this. Is that a double top, or are we just about to crack this and move to new highs? That remains to be seen. I'll keep an eye on this. Again, CPI and the Fed speak is going to be ultimately what moves this week. So make sure you're paying attention to that. If you found value here today, I'd appreciate it if you could drop a like on the channel. Subscribe if you're not already. Go over to Twitter and follow me there. Throw it down in the comments if there's anything you want to see from me, anything you want me to cover, or if there's any mistake you think I've made, let me know. I'd appreciate it. And until next time, trade safe, take care, all the best. Cheers, bye.